We're going to talk about a few things, briefly what you want to know about 2.0. I try not to overwhelm you with data, but just really some 10 things that you could use when using your customers, working with real estate agents, mortgage lenders, and things like that. And the first thing is effective dates. As I said, we've already talked about those. Something that's not changing is wait periods. You still have your standard 30-day wait period. You still have your 1-day wait period on newly mapped, and you still have the no wait period when it comes to loan types, if it's for a loan closing. Now, it's important to understand this on the loan closing part, that remember, it's not necessarily for real estate transactions, it's for actual loan closing. And so we have a lot of people say, well, I'm closing on this house, but they're paying cash. There's still a 30-day wait period with the National Flood Insurance Program on that because there's not a loan involved. So you just want to be cautious with that. Coverage is not changing as of yet. The ultimate goal when 2.0 came out is they wanted to change the coverage. Because let's be honest, let's think about the replacement cost of these properties. Just think about what these properties are selling for. $250,000 is not going to go very far. But they really wanted to push this out, to get it out. One of the big things they're focusing though is increasing residential coverage because it's just so low. Policy assumptions. So a policy assumption is really something as an agent you really want to know what it is. What this is when you move a policy from one homeowner to the next. So as I said, a lot of people like to call them policy transfers, but technically FEMA calls a policy transfer when you're going from like one write your own carrier to another one. Policy assumptions were very beneficial in the legacy program. In fact, I did one on my own property. That's how I kept it at a $350 rate. But in 2.0, some of the benefits of the policy assumption though is, if you go in and set up a new policy, they're going to give you what's called the full risk now on 2.0. That policy assumption is going to have those statutory rates that are going to increase each year, a max of 18%. And I'll give you an idea here. We had a customer come to us that we did a quote for, $3,000. The current policy was $400. Well, it could take them 15 years to get to $3,000. So that's where the policy assumption can be beneficial.